So let's talk more about your investment process. Global long short. I've read a fair bit of your stuff with regards to being on the long side, buy and hold, but I haven't read as much on the short side. So I'm interested to know, firstly, why you do shorting. Like, what is the purpose? Is it risk management for the portfolio? Is it you want to profit from individual security? You want to add alpha? Why are you shorting? And maybe if you can give us some examples. I think I read one piece about childcare centres or something of that nature.
So I guess working on the broking side and being long only, it was the market goes down sometimes as well. So when we set it up, I originally thought I don't want to have I don't want to not be able to invest in something because it's in another country or it's I think it's overvalued. I think it's going to make money on the downside. Typically we use it for hedging. So markets go up a lot more than they go down. I think we're probably coming into a cycle. To be honest, the other part was I really thought we were very late in the cycle. And I do believe that the market probably will fall for the next, say, 18 months, 2 years, and then be relatively flat and choppy and hard. So, having a product where we could, and, my own capital is in the fund as well, having a product where I can profit during those downtimes, it does make a big difference. We primarily use it, I guess, to hedge our long exposure. The longs, as I said, will go up more. The way we sort of structure the portfolio, and we've spent much more time on this just recently in terms of our messaging. You're always evolving and always trying to improve it. But essentially, the way we structure it is we probably have high conviction positions that we will put between 4 and 8% in, and you might have, say, 4 to 8 of those, depending on market conditions. Those really are the ones that you believe the asymmetry, so the risk to the downside is much smaller than what we'll make to the upside. Mm-hmm. And then how we get to those, we typically will have a thesis on a position. So you might tell me, oh, Scott, XYZ's cheap for whatever reason. We then will go away and work out, okay, what's the market think about that trade? We tend to find that we're quite, as I said, I like cycles, and we tend to be sort of counter-cyclical. You want to be at the bottom on the way up. Counter-cyclical, quite contrarian, I guess, in terms of if there's a stock that's deep value, normally the market's missing something. And that mispricing, when it gets corrected, is where you generate a lot of return. So what's the downside from the position? And then we typically will dig down into the actual company. So I'll go and look at what you're telling me, and is it validated? Is it true? What has the company done? Are they doing what they said? And then, then I'll look at the actual position and weigh up, okay, how much risk do we want to take on this? So the bigger exposure positions we know very well. I guess, especially with the smaller ones, you want to talk to management, you want to know the business inside out, know what you own, you want to sleep at night. And then if it's smaller things, like our hedging on the short side will typically be much smaller positions. So if they swing against you, it's not going to really move the needle as much. But if the market all drops, like as it did the other day, the bigger positions may fall, but the shorts offset the drop. So you end up capturing less downside and you get more of the upside. So I guess when you look at typical long short funds, the short book doesn't really generate a lot of alpha for you. It's more to hedge the volatility in the portfolio. So we probably do that more so than trying to find shorts. We do have one short, which is Tesla. That's our probably biggest short. I just thought that looked extremely overvalued relative to the business having no moat. And when he tweets out 420 takeover, it's sort of the risk was to the 420, and yet $60 say from 350ish or 360, and the downside's probably $300 or something, for example. Again, asymmetric risk reward to the downside. Typically shorting, as I said, the positions aren't as big. The GEM posts that I did in particular.
G8 Education?
Yeah, G8 Education.
Mm-hmm.
We're talking about, I guess, the difference between the West and the East. And I guess you just saw it with the election. The West Coast has been probably in somewhat of business conditions have been extremely bad since iron ore fell, which I think was around that 2012 time it started to really turn down. And we had in broking, we were in a lot of resource companies, and we actually shifted away and started focusing on tech businesses before everyone else really, when the downturn happened. So we did quite well through that period. And I guess, as I said, it's about being counter-cyclical. So WA went through a really hard time. And, as I said to you, I sort of mentioned off air, but a lot of people I know and and a lot of people in WA have experienced negative equity in their property. They have, seen businesses go under, for lease signs through the whole of, I guess, West Perth and Perth, and in outer office areas. So there's been a lot of slowdown. Like, and I use an anecdotal story. Someone I know at like a JB Hi-Fi, for example, they were doing, say, 900 grand a week. And then all of a sudden the average sales dropped from 900 to 450, 500, that drawdown in terms of people aren't spending as much. They've got negative equity in their home. The wealth effect turns down. I think the East Coast has had the opposite. They saw that huge boom, and we had that in WA. I mean, I had guys working, they're friends of ours that go work on the mine and get, work half a year and get $200,000 to drive a truck or something, and that level of wealth and spending goes through the economy a lot. And when it turned off, very quickly changes. And as I sort of mentioned, the election side, I think they go after housing, and people have been through a lot of pain in like WA and Queensland. And I think that has impacted the result. And that's why you probably saw the swing. And so the G8 thing was sort of the same ilk, that people don't have jobs, unemployment rises, they don't spend on childcare as much, mum's at home or someone doesn't have a job, it's much, it disappears. They don't have as much, and the vacancy rates start to rise a lot. So the East Coast as well, there's a lot of build, and again, they're not big positions, so it was more just something interesting to say, hey, if you look west, you can almost see what may happen in the future. And I try to bring my investing style back to, if you can see it or feel it and it's something simple, it probably is going to work. Like, I mean, we were talking about Amazon before, getting my earphones the next day, like, wow, that's a pretty impressive business. And I guess context on that story was that when we spent time in New York, we'd used Amazon Prime, and I put my earphones through the wash from the gym, and I ordered them that night on Prime, and the next day the guy was at the door as I was walking to go to the gym, and I was amazed that's how quick it is. But that's a great business, and that's something you think, wow, is that listed, or what do they do? And those sort of ideas come along all the time, and that's sort of, I guess, part of the way I try and find ideas, or listening, watching, seeing life, go by and try and find those ideas.